we go. All right, everyone. We are joined by Boris Alergant. He is the head of strategic initiatives at Babylon. Boris, welcome, and it's good to have you.
Thanks for having me. Excited to be here.
Excited to talk to you, man. What a wild time we are at in the markets. Obviously, we're here a little bit in advance from when you all, the listeners, are watching this. But there's a lot that's going on, and there's been continued volatility for most of 2026. And today we're going to dive into the Bitcoin ecosystem. Now, most people, they think of Bitcoin just as its primary use case, its primary entity, and they don't really dive too much deeper into it than that, or at least they might not even be aware that there's more going on behind the scenes and that there's constantly more work being done on it to expand Bitcoin to do a lot more than it was maybe originally intended to or able to. And so that's where Babylon comes in here. And so we're going to talk about not only kind of the state of Bitcoin and what's going on, but also some of the alternative use cases that Bitcoin can grow and evolve and expand over the coming years and some of the stuff that Babylon is already working on. So Boris, I mean, how do you even, get involved in this in the first place? There's so many different options for what someone like you can work on. Not only can you develop tech in like the traditional sense, but even inside of crypto, you could go and you could build your own layer one. You could go and work for, and do stuff like this with Ethereum or Solana and try to do DeFi in other places. What made you lean towards building out the Bitcoin side?
Yeah, look, Bitcoin is the largest asset class in crypto. Almost 2 trillion, maybe a little less today, given all the sell-offs, but it is the most established crypto asset class. It has proven itself as a store of value asset. There's Bitcoin, and then there's all the other coins. And Bitcoin, given how old it is, how secure it is, it's rather difficult to build with. And that's why folks haven't really done much with it on chain. And therefore, because of that, Bitcoin is really has this huge potential because right now it is the only asset that's really adopted by institutions. It's the only asset that really has the largest ETFs out there and is the only asset that sovereigns are buying and putting on their balance sheet. That's not true about any other asset, but it still needs to evolve. And I think we're at this critical, pivotal point where this asset can evolve and is looking to evolve as it becomes more and more mature and more institutionalized.
Yeah. So that kind of brings us into just like where we're at today. And I would agree, Bitcoin has been, most of us are here because we agree that Bitcoin has been one of the most remarkable assets in recent decades. And it has so much potential. And what's interesting now is that you're starting to see so much traditional financial attention towards it, right? You're starting to see asset
Yeah.
managers and banks start looking at it and saying, "Hey, not only can we look at Bitcoin in different ways to trade it and use it, but now we're starting to look at how we can do other cryptocurrencies kind of alongside it." And it kind of begs the question of like, "Hey, you know." If we can do all these other things with Ethereum, if we can do all these other things with Solana, can we get to a point where we can do similar stuff with Bitcoin? Because you're right, Bitcoin is the largest, it's the king of crypto. And so it kind of begs the question of can we do things of that nature with Bitcoin? Now, by default, it's a little bit harder, right? Because you have Bitcoin, which is just by nature a little bit different. It is not, or it wasn't originally intended to be something like Ethereum or Solana. It wasn't supposed to be this massive layer one platform with everything being built on top of it. But you guys at Babylon have started looking at this and saying, hey, I think we actually can do some of this stuff and that there is a place for it. So if you could just walk us through that and I guess just overall what you're working on at Babylon.
Yep. So maybe just to give a brief kind of history on Babylon.
Yeah.
Uh, the Babylon co-founders, right, were very much of the mindset Bitcoin is the king crypto, as you mentioned, yet it's very much underutilized. We know for the first decade of Bitcoin's existence, it has proven itself as a store of value, but that is not an efficient enough to just be a store of value. It needs to be a productive asset. And the co-founders were able to create something that was very unique, and it was the ability to lock Bitcoin on the Bitcoin network and be able to use it for economic security for other chains, and thereby earning some sort of reward or some sort of passive income for Bitcoin holders. And again, all of this is done without bridging or wrapping Bitcoin. This technology is native on the Bitcoin network. The extension of that tech has been kind of step two is we noticed, all right, rewards, economic security, great. That has resonated. We garnered as much as 65, 70,000 Bitcoin staked to the protocol. And we decided what do folks like to do with Bitcoin as well? That right now, obviously the centralized lending space is huge, but that comes with a huge set of risks. Decentralized lending exists, but obviously that has bridging and wrapping. What if we can take our technology, extend it beyond economic security? We already have created this mechanism to lock Bitcoin on the Bitcoin network and make it trustless and provable. What if we can do that and extend it and now use that Bitcoin in the best use case that the folks are using it, that's really used as collateral at being the best, world's best asset. We've done that, and we're actually launching what we call trustless Bitcoin vaults. And we're launching our first use case with Aave in the coming months, where you'll be able to lock Bitcoin natively on the Bitcoin network. And it will be trustlessly verified that it's there on the Bitcoin network, and you could use that as collateral to borrow stables on Ethereum through Aave.
So you're essentially saying, hey, let's add things like staking, borrowing, lending, DeFi to Bitcoin, right? And this is natively, correct?
Correct, in the sense that you will not have to bridge or wrap your Bitcoin. You can lock your Bitcoin on the Bitcoin network. You'll see it in your wallet just like you see it with Bitcoin staking, right? It doesn't move to another chain when you're providing economic security, right? You're just getting the rewards. Similarly, we've created this trustless Bitcoin vault to be a bit more, I guess, wide and much easier kind of to do more different applications just beyond staking.
So that's fascinating. I mean, I guess tell me as much as you can about that because that has been a pain point for people is, when it comes to wrapping and bridging, there's fears. I mean, there's been bridge accidents, there's been mishaps. And a lot of the time people look at that and they say, I don't want to have to go learn how to bridge and do the transfers and wrap and all this stuff. And it starts going over people's head. And I think that's where it gets confusing. And, one of the common things that we've heard over here is that the future of crypto should be like less complicated, right? You should be making it less complicated on the users because that's how you bring more people in. You don't say, hey guys, things are getting harder, it's getting more advanced, the learning curve is steepening. Doesn't that make you want to get involved? And it's like, no, I think for the average person, they might not have the time or the knowledge or the resources or whatever it may be. So yeah, I mean, just walk me through that a little bit more.
Yeah. Look, Bitcoin, obviously, Bitcoin holders are also very unique, right?
Yeah.
Um, they do not like bridging or wrapping. If you look at, you
Mhm.
know, the wrapped versions of Bitcoin, they represent less than 1% of Bitcoin circulating supply. And what that tells you is that folks, Bitcoin holders, do not like bridging and wrapping. The centralized kind of counterparty lending and borrowing space, though, is really large, right? So folks are used, especially the more sophisticated institutions that have access to these counterparties, are putting their Bitcoin up as collateral and entering into a centralized kind of borrowing arrangement. Um, I think folks still remember the the previous bear market and what all the issues with borrowing and centralized lending has created. So there is still a bit of, I would say, hesitancy. So what we're solving for is the ability to do this all on chain without having trust, right? Without having that centralized counterparty. The benefits there, again, from a security standpoint, as we mentioned, from a paperwork, et cetera standpoint, settlement risk standpoint, but also from an interest rate and cost standpoint. Having to go through these arrangements, typically centralized, if you look at centralized lending or borrowing, rates are significantly higher, even for AAA assets, right? Like Bitcoin, Ethereum, than you would get through Aave and various other DeFi platforms. So this is a way for folks to get the benefits of the security of being on chain, all those benefits, but also getting a better, more competitive interest rate.
Yeah, and having a partnership with Aave is big, right? For the listeners out there, I know most of you are familiar with Aave. They're one of the big leaders in DeFi. They've been around for ages now, and they are just like one of the biggest, most reputable sources when it comes to this kind of thing. which I think is important, right? If people are going to be going and doing this and kind of having this experience with Bitcoin, I think it makes sense to get like one of the oldest, most reputable, largest names to say, hey, you'd probably be a good match to do something like this. On the other end of this, if people are trying to come over and use Bitcoin for some of these more DeFi purposes, whether that's staking or lending, what can they look at in terms of a return? I would assume it's variable based on like supply and demand and timing, right?
Yeah, of course. I guess with the staking side, it is, let's discuss kind of, there's two separate kind of components here, right? Let's talk about staking. Staking is really a function of three things. It would be the amount of Bitcoin staked, the Bitcoin price, and then the reward token price,
Mm.
right? So you're getting X amount of inflation. The reward you're getting you're getting X amount of inflation of reward tokens. That reward token fluctuates up and down. Bitcoin that you have staked fluctuates up and down, and so therefore, and there's only X amount of inflation that's divvied up amongst all of the Bitcoin staked. Rates have gone, between 20 bips to 1%. We look at it as the most riskless thing you can do on in DeFi or really in crypto, right? Is
Yeah.
staking. Therefore, the rewards are reflective of the risk you're taking.
Mm.
Now, with borrowing, right? It's also going to be a function of supply demand, right? How much stable coins are out there, things like that. But part of it is also, I would say, real world interest rates, right? That they also have an impact on where kind of the borrowing rate. So wherever the risk-free rate or wherever the Fed funds rate is, does directly have an impact on a lot of these DeFi ecosystems, which is quite interesting. But regardless, because you don't have those same overheads of running a centralized counterparties, a centralized financial institution, etc., the rates on DeFi are always lower than that when you go through a centralized counterparty relationship.
Mm.
That's also, I think, why you've seen DeFi lending and specifically someone like Aave just really explode and have so much demand.
Mm.
So we see that as a trend that's going to continue. So the short answer to your question, staking really easier kind of to define how that works. And now we have real numbers. We haven't launched the product with Aave yet, but we think those rates are going to be very competitive, and regardless, better than what you would get with a centralized counterparty.
Yeah, and you make a really good point. Something that we like to hammer home over here is the idea of risk is directly correlated to reward. And that's the way that this goes, right? If something is lower risk in nature, you're going to be getting a little bit of a lower yield. If something is a little bit maybe more higher risk, then you might be getting a higher yield to be kind of compensating for that, right? What is the real risk for staking your Bitcoin? Almost, very, very little, right? Very minuscule. Now, with lending, maybe it goes up a little bit, but still, I think even in the overall crypto space, you probably look at lending and say, okay, it's probably not the most risky thing out there. I think towards the top of the risk curve, you probably get into like leverage, literally anything with leverage, right? People who are leveraging different products, whether it's perpetuals contracts or futures contracts, or they're just taking out loans to go and then lend that. And there's a bunch of other things that can get involved. And so it's fascinating. And one of the other big things that we always like to say over here is that people should have the ability to do this if they want to, right? You can do it with all these other blockchains. Why not give people the ability and then they can decide for themselves and say, hey, I want to do this with my Bitcoin or I don't. Or maybe I want to do it at one point in time and then I can stop and then I can go back to it at another point in time. And we've proven that we can do this with other assets. So I think it's cool to be able to give people the ability and say, hey, if you are crypto native, if you are into this stuff, if maybe you've done this with Ethereum and Solana and other blockchains, well, guess what? Now you're going to have the option to do this here with some Bitcoin. And I think that that's going to open up a new potential market because, we're not personally Bitcoin maxis over here. We think that there's a time and a place for different ecosystems, but there are a lot of them out there. And I think it's, understandable to be a big fan of Bitcoin. And we certainly like it too. So yeah, I would. This is really cool stuff.
And
Uh,
I'd say what else it really resonates with is not just
yeah,
individuals and crypto native folks, but you look at the Bitcoin DATs. I think they're at a
yeah,
very interesting time right now. With any kind of crypto sell-off, like they're originally vehicles to accumulate Bitcoin, right? That Bitcoin but they're accumulating Bitcoin by issuing debt in the traditional markets or issuing, preferreds, etc. Those preferreds need to be paid with cash.
Mm,
When Bitcoin price is going up, you can argue that it becomes easier for them to issue debt. It becomes cheaper. But in periods of volatility, like we're seeing today when we're recording the studio, recording this podcast,
yeah.
it becomes more difficult. So they're looking for alternative kind of ways to boost their Bitcoin holdings or boost income on their Bitcoin holdings,
Yeah.
and in order to meet those debt obligations that they do have. So imagine they can take their Bitcoin, right, that's on their balance sheet. They never actually have to move it off
Mhm.
balance sheet. They can keep it exactly where it is, and they can borrow USDC against it on Aave at very competitive rates, at
Yeah.
very low leverage. And let's say their preferreds are paying a 10% interest rate. They can borrow, let's say, at 4 or 5%. Well,
Hmm.
that's clearly a great use of their balance sheet and a great kind of opportunity for them to meet those obligations. And it becomes really capital efficient. And that's ultimately what we're unlocking here is more capital efficiency for these big for anybody that's holding Bitcoin. And these DATs have that real big need right now.
Yeah, you make a great point talking about like unlocking capital or even like unlocking liquidity. That's the whole point of tokenization, which it's going to come up a lot over here. But tokenization is constantly talked about because it can unlock capital, it can unlock liquidity, it can do all these things. This is kind of similar in nature. We're saying, hey, like let's unlock some of this stuff and allow the ability to do it. Now, maybe for the ETFs, even I would say from a lot of these ETF providers, you could say, hey, maybe not, maybe not, they're not going to go out and lend all this money and do that, but they could do something like staking. And you could opt into it and say, hey, I am okay with this. And then they get a portion of the pie. So they're earning a little bit more. Maybe you earn a little bit more. And it can be a win win like scenario. From the treasury side, right? All these DATs, they were probably people who would be very much into doing something like lending and borrowing, and feeding into that side. And then obviously there's the retail person who could do either and say, hey, if I want to do either of these, I always have the option to do it. My next kind of question here is, we've had the ability to do this with other blockchains, right? The question that some of the listeners might be asking is, why not just rely on Ethereum or Solana if I want to do this? Why do we need or why should we look towards Bitcoin for this kind of stuff?
Yeah, I think what we are solving for, and just to clarify kind of with the product,
Hmm.
is that we've created the ability to lock Bitcoin on the Bitcoin network, and then it can be used on Ethereum. There is a receipt token that says, hey, it's trustlessly verifiable, that it's completely verifiable that you have Bitcoin locked on the Bitcoin network, that Bitcoin cannot move, right? And therefore can be used as suitable collateral. So it's ultimately using it as collateral on Ethereum, but a better way than wrapping or bridging. That's ultimately what we're solving for. Ethereum is definitely the first place we will be launching with Aave on this, right? So it's having that Bitcoin on the Bitcoin network, but being able to use that collateral that is on that Bitcoin network on Ethereum. We will be looking at other chains and expanding. Solana is definitely one of the ones we're considering as well, but we want to take it slow. We know the largest lending market right now is Aave, and it is the largest lending market is also on Ethereum. So we're going to
Yeah,
start there, and that's ultimately where we see the biggest kind of pie, biggest kind of TAM for us right now at this point. That's our beachhead market.
I think it makes sense. Before I let you go, I got to ask you, what do you think, or what is your view about the 2026 macro landscape? There is so much going on, so many people have questions. What are your thoughts?
Yeah. Look, I think there's obviously it's been a crazy month, but I think look, January, you look at January, it's a lot of portfolio rebalancing. So I think the volatility there is kind of expected. Uh, I think what's interesting is seeing the commodities and the correlation or decoupling, I would say, in the previous weeks of Bitcoin and commodities, gold, silver. That obviously has changed recently, with at least today, right? With the sell off in those precious metals, and Bitcoin's kind of been following them. Um, Ultimately, I think all of this gets settled after earnings season and after we get a new Fed chair. When the Fed chair comes in and seems like he's going to be incredibly dovish and is going to lower interest rates, I think things are going to quickly change back. So in my mind right now, it feels like asset prices are cheap and underpriced, and there's obviously some nervousness, some volatility that is seasonal, but that volatility, there's a really strong macro setup going into 2026 with the new Fed chair and the easing and the lowering of the interest rate. So I'm actually pretty bullish. Look, I've been in the space 8 years now, working at a couple companies. This stuff doesn't scare me. I know a lot of the institutional folks that have come on board recently, they're looking at this and saying, wow, how do I manage this? This is, Bitcoin's down, what, 40% from all-time highs a few months ago. Look, this will all pass, and I'm very bullish. I've seen this before, and this is the long-term value prop of Bitcoin and crypto. It has been proven, and this is just a momentary blip. But everything seems to be the setup looks very strong for 2026. I'm quite excited about it.
Well, we are excited as well, Boris. Where can people follow you at? If they want to follow along Babylon or yourself, where's the best places to find you at?
Yep, we're on Twitter, Babylon, and then my Twitter handle's at Borissimo. And obviously, please reach out. Always happy to chat. And love to meet people in the space and educate them about what we're doing. See how we can help.
Absolutely. Well, Boris, once again, thank you so much for joining us, and we'll talk to you soon.
Thanks, Brandon. Great convo. Thank you.